Let's now move on. Viewers, India's first all-electric ride-hailing company, Blusmart, once celebrated as a green transport revolution, now lies in complete disarray. Cabs are stranded, employees are clueless, and founders are allegedly missing in action. The promoters of Blusmart, the Jaggi brothers, Anmol and Puneet Singh Jaggi, are accused of siphoning off loan funds meant for the company. The funds that were supposed to be used for buying the electric vehicles. They in fact are accused of misleading investors, lenders as well as regulators. The interim order from SEBI not only restricts them from accessing capital markets but also prevents them from holding key positions in any listed company for the time being. As per SEBI, EV loans for Blusmart were spent on uber-luxurious flat in Gurugram and some foreign trips. So imagine this, startup founders who positioned themselves as clean tech poster boys actually used Gensol Engineering as their personal piggy bank. And this particular scandal has raised questions on the entire ecosystem, the startup ecosystem in the country, because this has led to erosion of trust as well, as many have been calling it. We are joined by Sneh Jain, who is co-founder and managing director of Baker's Dozen. In fact, let's get a sense from him about this whole story around Blusmart. Thank you very much, Sneh Jain. Appreciate you speaking with us here on Times Now. Firstly, how will you like to respond to the revelations that have been made by SEBI order, and what will you say about how, something that looked so promising in the electric vehicle space, in the clean mobility space, how it is a story of somebody falling from grace, literally?
Thank you, Hina. Let me clarify two things first and foremost, right? One, there's no excuse or an alternative for human greed, right? In this case, if a founder is diverting money which has been raised specifically for business purposes, for personal gain, that is wrong. And that is wrong in any court of law, and that should be dealt with as per the judiciary. However, just to clarify, the second thing is that, we should also be cognizant of the fact that you can't use the same brush to paint all startups or the entire ecosystem. I think the Indian startup ecosystem is evolving. There are many founders who are out there hustling and building resilient businesses which will last, right? So there will be cases like a Blusmart or a Byju's or a Go Mechanic, and against that there are also cases like a Zoho or a Zomato or a Swiggy which have done great and built institutions which last over time, right? So I wouldn't paint the same brush. But one thing I would like to highlight over here is that, we need to reflect, and on the startup ecosystem, there are some misaligned incentives between the various stakeholders. Now, so what happens is when I started the Baker's Dozen 13 years ago, when I would meet some founders at that time, most of them, the discussions would be, how do we, grow the business? How do we do better? Where am I going wrong? But today, when I meet a lot of new founders, the first question that I get asked is, how do we raise funds? It's actually not about the business, but it's about how do we raise funds, because fundraising has become, by default, a metaphor for success in a startup.
But Sneh, do you think it's the mindset that if you're saying the idea today is to just, find ways to raise funds, the question is how do we raise funds and perhaps have an exit plan in place, make quick bucks, move on and, think of some other idea, raise money, make quick money and then move out of it. Do you think that's the mindset now and something that needs to be also addressed?
So I wouldn't agree that that's the mindset going in for a founder. See, when a founder starts the business, I would say 99% founders are genuinely, they believe in the idea of the business and they believe that they are out there trying to change an industry. What happens is when you raise funds and when you get onto that treadmill of growth, which investors ask you to get onto, then what happens is you are raising funds, you're trying to grow, you're growing unsustainably, hence you are burning cash and you're making losses, and then hence again you have to fundraise. And that cycle keeps continuing. Now, somewhere along that path, there are some founders who then, what is happening is you're diluting as a founder. So you're losing control on your business and your source of potential wealth. So that's when some founders might, look at shortcuts and look at ways to get out of it.
But
right?
don't
But
you
that's
think
not
even if it is done by one company's founder, even if it is done by two startups in the entire startup ecosystem, it will lead to erosion of trust? I mean, tomorrow, others who are genuinely wanting to, come up with something, have some very interesting innovation in mind, have got an interesting idea. Don't you think this kind of an episode is going to have an impact in the future for such people in accessing the market for funding?
See, there are both sides again, right? There will be cases where this happens and it leads to additional due diligence from an investor side, which is actually required. There's nothing wrong with that, right? If an investor is asking you for your MISs and doing an in-depth diligence of your business, that's absolutely right. But there are also cases like, see, when we talk of startup doing an IPO and many employees becoming millionaires because of ESOPs, that's also positive, right? So it comes as a balance. There will be some bad apples, but does that reflect on the industry as a whole? Absolutely not. And this is true. It's not only in India, right? There is a Theranos in the US, for example, which became a big, big issue. So in that case, these bad apples exist everywhere. Now what we need to do to get the trust quotient back is, can we make our diligences stronger? Can we spend time on corporate governance? Can a startup be told that your finance team and your corporate governance team has to run independently, has to ask detailed, hard questions, even from the founders themselves?
Accountability needs to be fixed because, in this case also the kind of details that have emerged are quite shocking. They were deliberately misleading the investors. They were deliberately misleading the regulators, the stock markets as well. So clearly, it was happening with a process, with a strategy, it seems. The idea was very clear that, some money for EVs was going to be used for something else. It's come out now with SEBI order. Of course, we'll be tracking it closely, but really appreciate your point of view. Thank you, Sneh, for joining us here on Times Now and sharing with us your perspective. We'll slip into a very, very short break right now. More updates on the other side. Don't go anywhere.